we're breaking down the recent Bitcoin crash. It's a real financial thriller with a huge twist.
So this whole story, it's a collision between what the charts promised and what pure panic delivered.
So for days, traders saw a pattern they thought was a sure thing. Everyone was holding their breath.
See, this pattern meant huge pressure was building up, a super bullish signal for the market.
And the textbook theory is pretty simple. This spring is supposed to break to the upside. Almost always.
And all that confidence? Well, it became the perfect bait for the trap that was about to spring.
But right at that key moment, bam, the story did a complete 180. The exact opposite happened.
So that coiled spring, the one everyone expected to shoot up, yeah, it just snapped.
Instead, this massive, overwhelming force just crushed it, kicking off a truly brutal, violent sell-off.
You gotta understand, this wasn't an accident. It was a controlled demolition by a massive, deliberate force.
Okay, so let's dig into the evidence, the clues that this disaster was about to go down.
This isn't your normal candle that just follows a trend. Nope. This is the candle that creates it.
I mean, its size and speed were just so unusual. It had to be a coordinated, intentional move.
It's like a speedboat cutting hard across two giant cargo ships, a sharp, undeniable change of course.
And that sharp crossover is basically a technical tsunami. It just wiped out all the bullish signals.
But you know, the real battle here wasn't on the charts. It was inside every trader's head.
It's this classic fight, right, between the rational Dr. Jekyll and the primal, fearful Mr. Hyde.
And here's the key thing. This panic, this human behavior, it's predictable. And that's what fuels the trap.
And check this out, it reveals a pretty brutal fact. 80% don't know how to profit when things fall.
And this is what gives the big sellers all the liquidity they need to get out at a high price.
Now, a trap this big leaves some deep scars. And not just in bank accounts, but in everyone's psychology.
So that level that was once a safe floor to buy on, it now feels like a ceiling, an impossible wall.
So the price has to walk down the staircase, with each step being a new psychological hurdle.
So the analysis really concludes that the key isn't just predicting assets, it's predicting human panic.
Which leaves us with one big question. Are we really trying to predict the market or the crowd?